Greetings all, Ben here, East West. Just going to take a look at the S&P. Just going to run the rule over it in a broad sense. Look at a few different aspects in terms of TA. I'm not really going to concentrate on any sort of fundamental outlook. But, you know, we can just run the rule over this in a broad sense and just see what we can see, because there's a few different things popping up. So, look, I'll just start here. Let's just keep it basic. I'll just start here on a weekly. And I'm just going to bring in some moving averages. So just in a very basic sense, you know, we're still well above the 200 week moving average, and obviously coming into this month we've recaptured the 50 week, which is good. But just in terms of cycles, we're now above the 10 week. So this is probably a little bit more prevalent when we come to a cyclical outlook on the S&P. But, you know, everything here on a very basic level is bullish. And then just even looking at the same way on a daily, you know, we did have this dip below the 200, but we've recaptured that, and we're definitely now well above the 50 and well above the 10-day moving average. So once again, cyclically, that's great. And we never really got into any danger of a death cross or anything like that, at least on the S&P. I'm just going to concentrate on the S&P today. So, you know, there's nothing to think that its corrective move through here is not, it's done, and you know, we can expect that this market's going to keep on keeping on and moving higher. So even just whipping out here to a weekly again, and just looking at some of these retracements, the main retracements that have happened. I mean, we've got the COVID low here. I mean, this was a great touch here, obviously right back to 50% where it's just held. And now, are we going to go on and take on this high is the question. Now, looking a little bit closer, now when we come off this pivot to the high here, we haven't got anything that looks particularly tasty in terms of a touch. But if we just bring this back to this one here, or even this one, I mean, we've got a touch here, which would have created a measured move, but this one too also just came back in, and you can see how that's just tested the old structure into this retracement zone, and on we've gone. So I think at this point it's fair to then take the next look at the retracement of this pivot, and when we do that, then we can see that this correction has come right back down into the zone. It's held, it's tested. You can see here how basic this is, that it's just come in and tested all this, and that's just confluence. So it's come in and tested this, it's come into the retracement zone, and now it's zooming back out again. So as it sits, we don't know where the top here is going to be, when this rally is going to run out of steam. Maybe it was today, I don't know, but you know, you can see very obviously that we've got some peaks in here that we've just come up and challenged. So whether or not the market's got enough oomph to get through and take out this peak is yet to be seen, of course. But you know, just on a very basic level, and just to make things neat, like you'd probably rather see this rally and maybe challenge this peak, because if that happens, then if we get the retracement, and that's still a big if, of course, then we can come back down here, and the 50% retracement of this move, if it came up and challenged these tops, would tie into this structure. So that, of course, is yet to be seen. But that's just the way I'd be looking at it, because this run is obviously incredibly steep, and at some point it's going to have to correct, but we just don't know if the top's in for this run yet. So if we just move back out to the weekly here and just bring in a bit of Ichimoku work, we can see that we got the nice cloud break on the weekly, which heralded the top up to here, and then we had the pullback, but we never threatened the cloud. So everything still looks pretty bullish in this sense. As long as we can hold this cloud. We've got a little bit of thinning of the Kumo here, but I don't think that's anything particularly to worry about. I mean, this is a weekly, so I would expect that this cloud, maybe not straight away because it's printing 26 weeks into the future, will eventually start to widen out again. And that just gives us a nice big zone of support in terms of the trend. Now, something else interesting here, you can see as we came down here, that the Chiku span, the lagging span, came right down and hit the candle support at the top of a flat cloud, and we've ricocheted back out in a very steep fashion. So just looking and thinking about the same thing on a daily sense, I mean, we had this trend up, and then obviously we've broken through the daily cloud, but now we've got back on the other side of it. So that, even though this is hot because we're a fair way away from the Tenkan-sen, and we have been for quite some time. I mean, all this month we've been trading well above Tenkan-sen, so the market may be looking for a pause just to let the line catch up. But we've got the Kumo twist that we got, that would have been only a day or two ago. So that means that enough time has gone by and this rally is sustained long enough to force the cloud back into a green stance or a bullish stance. So I think this cloud's not really going to play a part for us in the immediate future. However, that's certainly bullish, but we probably, the one thing I'd suggest is we probably just need price to come back and get back to the Tenkan-sen, or just pause long enough for the Tenkan-sen to catch up, just to give the market balance in terms of time and price. Now, just quickly looking at this in terms of corrections and bull and bear markets. So from this high here, and this is the index, remember, not the futures, from the high here at 4607.07, we did correct 10%, but we've come out of that correction very, very quickly. This was the old bull market line from the low, from this low here, which we obviously recaptured, and we've just sort of held that structural area, but we did just get this 10% correction. Now, the general, this is the bear market. This would represent 20% from this high, so we're a long way away from that. So just here, we haven't quite done it today. We've gotten close, but this line would represent 10%, a 10% rally off the bottom. So you can see how quickly that's occurred here on a daily. So that is a little bit of a warning sign. And we didn't close above it. So we just got to keep an eye on this just to see if we can just exit our corrective territory. Just say it like that. But a word of warning again, this is incredibly steep. And so, just to keep it basic, I don't think I have to tell you that we're running into a little bit of structure up here. And obviously we've got the peak up here that we've got to defeat. And then it'll just be a question of, like I said, when it corrects, I mean, you can just sort of see a bit of a structural element there where we were supported, we broke support, became resistance, we fell. We paused here a little bit, but now we've broken through. So the question then would be, are we going to come back and test this as support again? And then see if we can get on the other side of that. Remains to be seen. But that, just from a basic structural point of view, that's just how you'd be looking at it. And that ties into how we were thinking about retracements and where the market could possibly retrace to. And so back out here on a weekly, just thinking about the trends. So this was the COVID low. And obviously some of these touches haven't been perfect, which is why I've made, rather than a trend line, I've just made this little trend channel just to show that we are still getting, and remember on a weekly here, we are still getting these higher lows. But the reason why this becomes important is because, in my opinion, we've still got this to overcome. Okay, so what we would not want to see, well, we don't know. Is this going to test this, and then we've got a battle to see which one's going to break? That would just be, so this trend line, I'd just be watching this because it's unproven. We've only had sort of 2 points here. But certainly if it came up and just touched this and then started to fail away, well, then we would just go back to what we were saying in terms of our structure and retracements and just see how the market then responds to those levels as it tests them from above. But certainly getting on the other side of this and breaking this peak, well, then all of a sudden this sort of lower high scenario will conk out, and then the market is open to going a bit further than that. So I'd probably just watch that and then tie it into this. So just thinking about the indicators here, and this low here, you can see it was 39. So what I usually say is that you want the RSI to hold 40 if it's going to be a bullish market, because in a bullish market we will travel between the overbought area and 40. So the fact that this is held is good on a weekly. We don't have a crossover here in the true strength indicator. We're looking for that as well, just for a bit more confirmation. But there's plenty of room left here for this to rally. Okay, and you tie in all those trends, and you could even start to just take a trend here, even though we've blipped through it, we have recovered it. So whether or not this is blown, I don't know. But once again, as I said before, I think you just watch this to see how the market responds when it gets to that, because it's running quickly. And so when we just move into the daily here, you can see an example of what I was just talking about. Is if you look at here, this is 58. So in a bearish market on a daily, when we were doing this and coming down here, you can see that we've respected that 60 area, and we've moved between 60. Well, this didn't quite get there, of course, and the oversold area, but now we've come through that. So one thing we've got to be careful of here is this is the rate of change, okay, and it's pretty high. Okay, let's just line that off. You can see here that it's just a warning, right? Because we know that we've come up here. So, I mean, here it went a little bit further, but it corrected. It went a little bit further, it corrected. You know, we got a little bit hot, but we're pretty warm up here. So, just with this, it looks like there's a little bit more room to run. Like I wouldn't be saying that this is going to be the short-term top or not. But we've just got to be a bit wary that, you know, we could start getting pretty hot pretty soon without, unless we have some sort of pullback. And you can see even here that there's a gap in the market here that, you know, at some stage will get filled in. But maybe that's just enough to cool it off a little bit. But certainly once we start getting over this 70 line in the RSI and start getting a bit warm here on the daily, that we can think about potentially a little bit of a top and a retracement coming in, and the rate of change indicator, as that starts to diverge away from the price, that will probably warn us that the strength is just starting to run out a little bit for the S&P on this run at least. So just looking at this in a cyclical sense, the fact that we've gotten, let me bring it in here, maybe a tad hard to see, but this green line here is the 10-week moving average. So the fact that we're now getting a cycle that's broken and closed above lends weight to this being an intermediate cycle low. Okay, now this might be a little bit hard to see, but at one stage I thought this was the cycle low, but the problem is that this, you know, a 70-day cycle fits a lot better than having this short little cycle in here. So to have 4 cycles and then we get the failure on the 4th to make the intermediate cycle low fits quite well, and right now we're sitting here on day 18. So just basis the historical averages, I'd be thinking sort of here into early deck is where we'll get, you know, maybe just that little bit of a correction that comes down and just gets maybe below the 10-day moving average like this, as we've been talking about, sometime in here between deck and Jan, before we go on to make the next cycle. Okay, so day 18, that could represent quite a good candidate for a half cycle high. So what we would think in a half cycle high is, you know, that we would come back a little bit to test below the 10-day moving average before coming up to get the daily cycle high, and then we'd be looking for a close below to make the next cycle low of the new intermediate cycle. So that would be like daily cycle 1. So of course remains to be seen, but that is how I'd be reading this at this stage. So we're probably close to a little correction, a little rest, you know, depending on how far back we go, we don't know. But I would suggest just from this that it's probably getting close to just maybe a slight pause, you know, like that before it goes on, and maybe it takes this peak out and challenges this to get, and maybe just above to get the daily cycle high before we correct into a daily cycle low. Sometime, like I said, this is just working out historical averages. That 27th of December would represent about 61, 62 days, which is the average cycle length. And then these periods either side represent one standard deviation from the mean. Now, the next item on the agenda is I didn't pick this up myself. I've got software that reads harmonic patterns, but what we've got here is what looks like a reasonably good cipher pattern going in here, a reversal pattern. So that just lends a little bit of weight to, you know, a top potentially coming in here. So to qualify this for a cipher pattern, what we need first is we're looking for the A to B leg. Okay, so this leg to retrace at least between 38.2 and 61.8% of the X2A leg. So we got that. We came up here, we just shy of the 50, but we got above the 32.8. And then the next thing we've got to do is we need to measure the X2A leg like that, and then bring this back up to the top of X. And we're looking for the B to C leg to extend at least between 1.272, which it just touched, and 1.414. So that, so far we've got two legs that qualify. And then the final check we need to do is that the C to D leg retraces at least 78.6% of the X to C leg. So when we bring that in, we can see that we've just, today, the last couple of days, we've just tickled up into that zone. Okay, so that, in a harmonic pattern sense, is a warning that, you know, that there is a reversal coming soon. Whether or not this unfolds is, you know, it's always debatable. But this is just, what I'm doing here is putting together a lot of supporting evidence. So what I'm saying is that you've got this pattern coming in, and it's just coming into this zone as well. So that's how you just put it together to get confluence. So is this a good place to buy the S&P? Well, I wouldn't, but of course your trading and investment decisions are up to you. In a strictly investment sense, if you're looking for the next 3 to 5 years, well, you know, go for it. But in a trading sense, in the short term, probably not the best spot. But in saying that, we've got to keep in mind that, and I just ran a test here, we've got to keep in mind that November, over history, is a positive month 71.7% of the time. Okay, it's one of the strongest months in the seasonal calendar. And of course, December, the good old Christmas rally, is up 76% of the time. So, you know, when you look at those seasonality factors, there's no reason to think that, you know, the S&P is not going to have and continue on this strong month. But, you know, of course, we're only halfway through. So, you know, I think it just really, for the rest of the next couple of weeks, it's just about waiting for that potential retracement and that potential correction before jumping on board for more prices. That's how I would look at it. And so to finish off, I just then sort of take all those observations and thoughts and then try to wrap them in some sort of Elliott framework, which isn't, you know, trying to predict anything. It's just trying to organise all the things we've just seen into some sort of coherent looking count to let us think, okay, well, this is kind of the roadmap that I'm expecting price to now take on. So I think we've got the WXY, like the double zigzag through here, and it looks like we've had an exact replica of this almost. Let me show you. So market fractals, I don't usually like to harp on them too much, because while history rhymes, I think it's dangerous to do this. But this one was interesting because if I just put the top of that there, and then I'm going to bring this bottom and line it up with the bottom of this, you can see how closely this little movement in here mirrored this one on a smaller scale. It's not exact, and they're not often, but you can see down, up, down, up, down, okay, like that, which makes a very confusing pattern for an Elliottician to pick apart and get and put together. But as far as I can tell, that is what's happened through here is exactly what's happened through here. But now we're getting this mega strong wave. So looking at this, I'd be thinking, even though I've still got problems with calling this 1, 2, 3 for various reasons, I won't go into them, but I don't like the way this starts. But I can only deal with what's in front of me, and I'm not trying to predict anything. I've got to call it something. So as this sits in a bullish sense, I'd be thinking that this is some sort of one wave, and then we're going to get two, some sort of pullback like that. Then we'll get 3, we'll get 4, and then we'll get 5 like that. Now, word of warning, when I do this, don't pay too much attention to the dates. Okay, I'm not really trying to predict time. I'm just trying to predict shape. So this could happen a lot quicker, or it could take a lot longer. the time factor of the what's happening down here is irrelevant to the shape that I'm expecting. That's all I'm looking for. I'm looking for this rally to run out of steam and for a retracement, hopefully back into test all that stuff that we were talking about before we kick on and get a much stronger wave that, you know, will probably come up here and challenge the all-time highs. That's how I'd look at this in a bullish sense. In a bearish sense, I'd be looking at this as being three waves, because I think there's, like I said, there's still problems with this being an impulse, which is why I'm not really getting too cock-a-hoop about the bull case just yet, because I need to see that break and that swing structure set up, and we're a little bit away from that yet. So until that happens, this discount remains possible, that we're going to get a W, some sort of WX and a Y down to here to finish what I think would be a bigger wave too. Okay, so that would be the bigger correction of this COVID rally, which I think is a one wave. Okay, I'm not, this is not, I don't know if I've really got a primary at this stage. I think that the whole point here with Elliott is, just because I'm sort of labeling things up, that it's not the labeling or the expectation in an Elliott sense that is giving me my direction to the market. I think just at a very basic level, I might just turn this to candles to make this a little bit easier to see. At a very basic level, it still just becomes about support, resistance, and retracements, and how the market swing structure sets up. So we get that, and then, you know, we confirm bullish. We start getting this, and we can, you know, we're more bearish. We start breaking the structure, and we start swinging down. Well, probably not quite like that, but, you know, if we sort of do this, well, then, you know, and we start failing, then we're back looking at it and probably relabeling what we think we see. So that's it. I mean, that don't read too much into the Elliott. It's more a way of organising what you're seeing into some sort of coherent roadmap of what you think might happen in the future. So that is all I'm looking at with the S&P at the moment. So that the main takeaway is we've got potential here for a little bit of a short-term top. We know we've got this structure that we've run into. We know we've got some indicators that are suggesting that the strength is close to waning, and we've also got that cipher pattern coming, warning us that this is potentially a reversal point as well. So like I said, for me, and there's nothing to say that this just doesn't explode up further. I mean, it could possibly do that, but for me, I'd now be looking for, and this was a little bit indecisive, we know we've got this gap to fill, I'd be looking for some sort of retracement, and to see how the market then respects its old levels. Maybe we fill this gap in as well to make the retracement. And then once we do that, then we can sort of see where we sit and how we're feeling about the market, what the rates are doing, what the outlook's like, and then we can make some more trading decisions. So that's it. That's the overview of the S&P for today. Thank you for everyone who's been liking and subscribing to the videos. If you haven't done so, then please do so, and I'll see you next time. Bye for now.